Well, it gives me great pleasure now to bring on board Siddharth Shah, CEO with API Holdings, to talk about what really prompted this rather unusual transaction, an online pharmacy company coming together with a diagnostic company. Siddharth, we just spoke to Mr. Velumani. It's a big day for him and it's a big day for you. While for him it is end of a journey, for you this is the new beginning. So what really transpired this rather unusual deal? An online pharmacy company investing in a diagnostic firm.
Hi Nikunj. First and foremost, you are right. It is a big day, but I would humbly disagree that it is not an unusual move. I would call it a very, very necessary and a very, very welcome move on two accounts. A, it is the time of homecoming for Indian startups. It is the first time that a unicorn in India is now acquiring a listed company. But coming to the business rationale, we are very firm believers that outpatient healthcare in India must be made holistic and from a single point of care. We believe that a patient requires consultation, a patient requires a test, patient requires treatment, which is primarily medicines and products. And with all of this at one place, a patient's entire journey can be with one single player and one single partner. We believe we are completing our model of holistic healthcare for the patient. You would be absolutely delighted to know, and I'm sure you know, that ThyroCare has the lowest cost structure and the highest volume in terms of diagnostics processing. Pharmeasy today has the highest number of patients transacting today on a platform for buying medicines on a digital platform. I'm sure you must also be delighted to know that we have over 80,000 retail partners today across the country, 80,000 pharmacies and over 6,000 doctors. So now if you put the patient at the center of it, all the touch points that the patient has, a lab, a doctor, a pharmacy, and at-home services are all now available under a single roof. And it is our endeavor that 70% of India's population will get a consultation, a test, or medicines under 24 hours, and in urban area under 4 hours. And we believe the extensive network of ThyroCare with over 4,000 touch points across the length and breadth of India, coupled with the fact that we as Pharmeasy today get over 17 million monthly active users on our platform, presents a very, very potent combination for the consumer to get one-stop healthcare. And to that extent, we believe that this is an outstanding deal, not just from a business or a financial perspective, but more importantly from a patient's perspective of how you can leverage technology to deliver outstanding outcome for the patient in healthcare.
Okay, great. Now that you've explained the thought and the rationale behind it, I want to take it forward in terms of transaction. When do you think first the transaction of the open offer and the stake buyout of Mr. Velumani and his family will happen? And the next step is that will you be merging and taking Pharmeasy public once the transaction goes through? And if yes, how soon?
Nikunj, we believe that the regulatory process will take between 6 to 10 weeks to get completed. And within that period of time, subject to what we get in the open offer, we will own between 66% to, if the open offer gets fully subscribed, 92% of ThyroCare. That is part A. Part B, as Pharmeasy, we are very actively considering about going public. But it's too early to say what would be the timelines and what would be the manner in which we go public.
When do you think the distribution and the synergies of your supply chain and ThyroCare will come together? Because that's the time, like you said, when two large pan-India networks, when they come together, it just creates a behemoth. And that perhaps is the most exciting part, isn't it?
Absolutely. I think we have today the ability, if you look at our group API Holdings, like I said, we have 80,000 retail touch points in over 150 cities of India. We today have, like I said, 17 million monthly active users, and we deliver medicines to every single zip code of the country. And we have 6,000 doctors as part of our digital network across the country. Now you couple that with the power of ThyroCare's processing low cost quality diagnostics, we believe that it is absolutely going to be a cracker from the consumer's perspective in terms of what they can expect. And we are very confident that we can build in world-class technology with our learnings from Pharmeasy into ThyroCare. at every stage. From the time you place a diagnostic test, you will get full visibility and transparency in terms of who's the phlebotomist assigned, what is the previous test, his ratings, what is the time he will come. You will get full track and trace and availability around how a phlebotomist will arrive. After that, basis are barcoded techniques. Today, if you place an order on Pharmeasy, from the time you place an order till the time you get it delivered, there is a 10-point checklist, and you can check where is the order. Has the order been picked? Has it been packed? Is it out for delivery? Track that. You will be exactly able to see the same thing on diagnostics, saying that has my sample been collected? Has it gone to the laboratory? Is it being tested? Which machine is it in? And you will get full visibility. Today, we have the capability on Pharmeasy to ensure that there is zero error on medicine, that whenever a medicine is scanned at the time of dispensation by a pharmacist, a photograph is taken and you can actually check that there is no medication error. A similar thing to give assurance on test quality will also be given. And last but not the least, all of this data will come onto the cloud. Like you and I always face a problem, right? I don't remember what were my test results 6 months back. I don't remember all the parameters. All of this will come on the cloud. And imagine all of this coming at one single place for everything related to your test, your treatment, whether it is medicines, OTC products, your consultation, will truly make it one of its kind, outstanding technology-based experience for consumers. And we are confident that within the next 12 to 18 months, you will see the rollout of this technology and you will see diagnostics, pharma, healthcare in a way that India has never seen before.
And the data will be available to the doctors, so I can really imagine that how smooth the integration would be. Now you've disrupted and you've been a disruptor in the entire pharmacy business. What are the chances that you will be able to even make a very large change in the traditional diagnostic business? I mean, are you thinking on those lines that with the use of technology and with the use of innovation, you would be able to change the business model or the traditional Indian diagnostic model?
We are absolutely confident. We are absolutely confident that we will be able to bring a paradigm shift. I can guarantee you 18 months down, we will be at the same forum and you will look at a paradigm shift in the way technology happens, from the way consumer experiences happen in the time of visibility and transparency of booking test, to information around how your test has gone and your results being on the cloud and analyzing them, to the entire consumer experience in terms of a phlebotomist coming at home or you going to a phlebotomist. It will be a truly standardized, tech-led, innovative experience. And we can guarantee you that we will be here 18 months later and you will be definitely happy about the kind of change that we brought about. And this will not just happen in cities in some parts of the country. We are looking at ThyroCare as a truly pan-India platform. It has 4,000 partners across the length and breadth of the country, and using technology we will go across the length and breadth of the country. And it is our belief that 70% of India's population will be able to get a quality test report under 24 hours, and that is the objective with which we are working very, very hard.
Siddharth, good evening. This is Nentara. You clearly have very big plans. You started off by saying how you're the only unicorn to acquire a listed company. My one question to you is that for all your ambitions, will you need to go in for more fundraising, especially for this transaction as well?
So let me tell you that the entire funding for this transaction has been fully tied up. We have had quality marquee investors, institutional investors who have subscribed. We have actually gone in for oversubscription as part of this capital raise. So everybody from Temasek to TPG to Naspers to B Capital to Think Capital and including Indian funds like Kotak have subscribed to our equity to help us fund this acquisition. And we are extremely confident to be able to create value from this point onwards.
You also said you would be going in for an IPO, and at the same time you're talking about how there is so much synergy between all of the businesses. So why are you not merging and then doing an IPO? What is the rationale about keeping everything different?
Look, I think at this point of time, we are taking it one day at a time. The idea is to ultimately provide a unified consumer experience to the customer. How that happens in terms of a corporate structure is something that we'll take one day at a time. And we will cross the bridge when we get to that, right? Our intent of going public is there. We are very very seriously deliberating at the stakeholder level around the timelines, nature, structure of doing that. But it's too early to say what will be the exact path.
When I asked Mr. Velumani that at what valuation his stake in Pharmeasy now would be valued, he promptly gave me a number of 4 billion. So can I safely assume that that is the benchmark for your company now, 4 billion whenever it goes public?
Nikunj, you are right. Approximately $4 billion is the price at which, like I told you, 6 institutional investors have subscribed to the stock of our company. Right. And this includes, like I said, sovereign funds like Temasek. It includes global tech leaders like Process. It includes some of the largest private equity funds like TPG. It includes hedge fund like Think Capital. It includes a growth equity fund like B Capital. And it also includes an Indian private equity fund like Kotak and our earliest VC backer, Orias. So there is a large number of institutional shareholders that are subscribing to our company's stock. And there is more demand for our stock at this price. And yes, Dr. Velumani is also looking at investing alongside these investors on the same terms at the same price.
Okay. Now, you've been very transparent. I appreciate that. You've been very transparent in saying that you plan to take Pharmeasy public. The valuation is something which you've already shared with us. What happens if you don't get the requisite stock back in the open offer? I mean, given the proposition and the plans which you've shared, I'm sure minority shareholders would say that why should we tender our shares at 1300? What happens in that? You don't get the sufficient 75%.
So Nikunj, like I said, it's not the only way to go public is not just merge into Thyrocare, right? We can even very, very strongly consider going public independently or look at some other options. So like I said, we are keen to go public, but it is not that we are looking at only Thyrocare as the only option of going public, right? I think there are multiple things and we will cross the bridge when we get there.
And what kind of stake will be held post this transaction? When you look at both the entities, you're talking about 66.1% stake in Thyrocare, but also what is the founder's stake in Pharmeasy?
So as of now, the stake of founders in Pharmeasy is little close to 7%. And our management team owns another 6%. So between the founders and the management team, we own about 13%.
Okay. You have also, given a price of 1300 rupees a share. I'm just taking forward from what Nikunj was also saying. What happens if everybody doesn't tender the share and if the open offer is not successful today? You did see the stock close at about 1450.
Look, we continue to believe very strongly in the story of Thyrocare, and we continue to believe that Thyrocare is a great asset. We believe that Pharmeasy and Thyrocare can work very strongly together. I must tell you that Pharmeasy has been piloting with Thyrocare just in terms of Thyrocare being the back end and Pharmeasy being the front end in small pilots, right, in certain parts of the country. And like any other transaction where Thyrocare works in a B2B capacity with all the other labs, including 1mg and Pharmeasy and so on and so forth. We are very, very encouraged with that. Our first focus and our only focus at this point of time is to give this unified consumer experience across consultation, test, treatment, and information for the patient. I think corporate structure is the next part of it. I am sure that we can even look at 2 independently listed companies and so on and so forth. There are multiple ways to make it happen. And we are absolutely open to the possibility that minority shareholders may not tender shares, right? I think all options are on the table. We have evaluated all of these. We continue to first solve for the business. I think solving for the structure is something that we can do at the right time.
Siddharth, if I can go back a little bit with you. We just had Dr. Velumani on the channel who said he came from Coimbatore with 500 rupees. He started Thyrocare with a share capital of 2 lakh rupees. Tell us a little bit about what kind of share capital you began Pharmeasy with.
Well, I'm glad you asked this question. I started this company actually as a project at IIM Ahmedabad, right? I was in my final year. I had just worked with Goldman Sachs in the investment banking team in Mumbai as part of my summer internship at IIM Ahmedabad. Uh, I thought that I'm unfit for a corporate job, so came back to campus and decided to opt out of placements. As part of my final year project, I did a project under Professor Anil Gupta, and he insisted that I incorporate a company. And that company that I incorporated was a company called Dial Health. And that company was actually the first call order or online pharmacy started way back in 2012. I was very fortunate that my closest friend from engineering, Hardik, who had gone to Carnegie Mellon, came back to India. Then my friend Harsh, who was my senior at engineering. And then my very close friends from school, Dharmil, and my closest friend from junior college, Dhaval. All of my friends actually came together. I started Dial Health, and that actually failed quite fantastically. Then we started a chain of retail stores in Mumbai. That didn't work out as well. It was only in 2013 that we started a B2B business in India, and starting in Mumbai called Ascent Health. And that was an outstanding success for us. And basis the success of our B2B model and strength in supply chain, we relaunched Pharmeasy in 2015 as a consumer brand. And now if you look at the journey, we've actually built out a very, very strong network where we manage both B2B, B2C, doctors, everybody as part of a single integrated digital ecosystem. And it is this experience of ours of running a B2B business, then adding a consumer layer, creating a robust consumer experience on top of a very robust supply chain. And what we've done in pharma, I'm sure we'll use those experiences, the strength and the quality of our founding team and the strength and depth of our management team put together. We will apply those same principles in diagnostics and make Thyrocare an outstanding success.
Do you think COVID has changed your valuations for the pharmacy business, for the diagnostic business? Because there is this big attention both in terms of valuations and need and also disruption which has come in the diagnostic stroke, the pharmacy business.
Sorry, Nikunj, I didn't get that.
No, my question is that do you think COVID somewhere has really changed the dynamics of the pharmacy, online pharmacy business and also the entire diagnostic business? I mean, if COVID would have not been there, we wouldn't have been talking about such valuations either for Thyrocare and for Pharmeasy also.
Nikunj, let me answer that in two parts. First and foremost, I would like to absolutely clarify that while our consumer facing business is absolutely rock solid and doing fantastic, we often miss out a phenomenally large B2B business also that we built out that has 80,000 retailers that buy medicines from us in 140 cities. Right. And that business in terms of GMV is as large or actually larger than what we do purely with the consumers. And all things put together, we are north of $1 billion of GMV right now across our B2B and B2C businesses. Right. And the way we look at it, we don't look at something being online or offline. The way we look at it is the business digital enough? Right. And to that extent, yes, digitization has happened drastically. So if you keep the consumer in the center, the consumer doctor interaction, has it become digital? Absolutely. The consumer's interaction with the retailer, has it become digital? Absolutely. Has the retailer's interaction with the pharma company become digital? Absolutely. Has the doctor's interaction with the pharma company, with the MR become digital? Absolutely. So yes, COVID has played I would say an outsized role and a perverse role, if I may say, from a humanity perspective, right? But I would say COVID has played an outsized role in the rapid adoption of digitization in the entire healthcare ecosystem. And we are big beneficiaries, unfortunately, in these tough times of this. But we believe that this digitization in the long run is outstanding for the country, because it is in these times that we are actually able to deliver medicines to every retailer, every doctor, every patient. And you'll be glad to know that in spite of the first wave of COVID or the second wave of COVID, our operations have not been shut for even a single minute. And it gives us great pride that we are able to serve this country using this digital adoption that has happened, right? And I am sure that this digital adoption, first time around that happened out of compulsion because people had no choice. Unfortunately, in the second wave, people had a choice and people are now coming to digital second time around out of choice, not out of compulsion. And this digitization is to see across the space. And I do believe that to that extent, COVID has played a huge role in digitization, and platforms like ours have benefited from this digitization immensely.
Okay. what is your view on the way how the online pharmacy business has evolved? You've got, Tata's have taken stake in 1mg, NetMeds, another corporate house, has invested. Does that worry you? And do you think somewhere there is just too much of, too much of give and take which is happening? I'm just trying to understand your thoughts on the way this entire online pharmacy business, which 10 years ago did not exist and now is commanding valuations north of $3 to $5 billion.
Nikunj, the way to look at it is, like I said, healthcare today is the second largest consumption category in the country. Within that, a large part of the expenses still happen in the outpatient ecosystem, right? And within outpatient, like I said, you have consultation, you have tests, and you have treatment. We believe that in India, there has to be a single player that will holistically partner the patient to all their healthcare needs and ensure that they get a single point of connect for all of these things, right? Our strong belief is that this is a industry where there is not just room to survive, but thrive for multiple players. Even with our scale of north of $1 billion of GMV, we are still less than 3% of the market. There is enough and more room for lots of people to come to survive and thrive in this industry. And to that extent, our focus continues to be what we can do ourselves, because there is significant headroom for us to continue to grow.
Siddharth, if I can take that point forward, where you're saying there's significant headroom to grow, you will, in a sense, be competing with Reliance Industries and NetMeds. You're going to be competing with the Tatas. Amazon has also started entering e-pharmacies. It's been doing pilots after pilot in Bengaluru, Hyderabad, etc. You don't have that kind of capital either. So how will you compete with the biggest of the big?
Look, our story is a story of 5 Gujarati Jain co-founders who started small and dreamt big from the suburb of Ghatkopar. We started with nothing. We came from families that put a lot of emphasis on hard work, education, and that is what has gotten us this far. We failed for the first 2 or 3 years. In 2015, when we started, we were the 7th online pharmacy to start, right? There were lots of leaders with much more deep-pocketed backing behind them, right? NetMeds, MedLife, Ziggy, 1mg, so on and so forth. I think we've only focused on one thing, which is to keep our head down, solve for the patient, solve for the customer, and create and use technology to make that happen. And that has gotten us this far. Having said that, we have tremendous amount of respect for what people like the Tata Group and the Reliance Group have done. We believe there is room, like I said, not just for one player, but multiple players to come and thrive, survive, and grow in this industry. It's not a case of either and or, right? And we believe that our focus continues to be only on healthcare, and we will do everything in healthcare. I am sure a lot of these people have significantly large priorities across the board, and I'm sure that they will do well in that, but we believe that we can do exceedingly well in our focus on healthcare.
So it's a many winners take all market, Siddharth. That's the sense that is what you're trying to say. But if I can elaborate on that point further, you became a unicorn by acquiring MedLife. You're now going to be a listed entity once again by an acquisition. Is this the way you're going to go? Raise big funds, make big acquisitions, and grow, inorganic growth?
Let me just clarify, at this point of time, we are not looking at going public through the acquisition of Thyrocare. Right now, it is the first Indian unicorn, a private entity acquiring a majority stake in a listed entity, and we'll see what the future holds. But to answer your question, we do believe that there is significant opportunity to consolidate this market, and within that create very, very unique offerings. And to that extent, we have used both organic and inorganic tools, opportunities at our disposal to figure out how can we strategically keep on building this business. And we will continue to look out for lots of such exciting opportunities in times to come.
Lots of exciting opportunities to come. Nikunj, that's Pharmeasy for you, ladies and gentlemen, creating history of sorts. Pharmeasy is India's first health tech unicorn, became a unicorn after the acquisition of MedLife, and now it is going to be acquiring Thyrocare, a 4,500 crore rupee plus deal, an open offer, and there's going to be a big IPO also of Pharmeasy. Siddharth Shah, thank you so much for agreeing to give us this exclusive interview. ET Now is the only channel that has got you Thyrocare as well as Pharmeasy, and that special conversation with Dr. Bellamini of Thyrocare coming up for you after the short break.